Hello. On this episode of On Subrogation, we're going to talk about what happens when a tortfeasor's liability carrier goes into liquidation. I'm Jason Sullivan of Rathbone Group, and unfortunately this does happen from time to time. When a person buys insurance, they're buying a liability coverage that they expect to pay out when they cause damage. Now, the insurance world is highly regulated, and each state has its own Department of Insurance that regulates how insurance companies operate. And on the financial side, they regulate to make sure that insurance companies have the ability to pay claims as they come in. Now, in a case where maybe there was mismanagement or something has happened to the company and they're not able to pay it, the Department of Insurance recognizes this, and the first step is they'll create a receivership. And the goal of the receivership is to get the company back into a position where it can pay its anticipated claims. They take over the management and try and get it back on track. If this does not work, then the Department of Insurance can move to the next step, which is a liquidation. And a liquidation is a lot like a bankruptcy for an individual. They file a notice that they're unable to pay the claims. They will then marshal all the assets, sell those assets, and begin to pay claims. So what does this mean to you when you have a subrogation file on your desk and you find out that the company that you were trying to recover from is now going through a formal liquidation process? Well, the first step to be aware of is that it usually means the tortfeasor is going to be immune from any personal liability for the damages. And so if the person paid for insurance, they paid their premium, most states find it's not fair to hold that person at fault for damages they caused, which ordinarily their insurance company would pay for, except for the fact that it's going through a liquidation process. So generally this means that the tortfeasor is immune from any liability. There are some exceptions where the damages exceed what was the available policy limit, but assuming that's not the case, the tortfeasor is going to have immunity and you can't pursue them directly. So there are a couple of things I recommend reviewing or looking at on a file before you close it down when you get that liquidation notice. First thing is, are there any other parties that might be held responsible for the loss? If there are other tortfeasors that are potentially responsible under the comparative fault laws in that state, you are free to pursue them as long as they're not also insured with a company that's going through the liquidation process. The other thing to look for is, does the tortfeasor have another policy of insurance that might step in and pay this? Whether there's another auto policy that's in place, or maybe a homeowner's would cover this, or if there's an umbrella policy. Those are all things to investigate to determine, is there another policy liability coverage that should step in and pay your subrogation claim? Now, assuming you can't find any other tortfeasors and there's no other insurance that should step in for the tortfeasor, then you're left with the proof of claim process in the liquidation. And the way the proof of claim process works is, once there's a formal liquidation order, parties who have claims to the funds, which would include you with a subrogation claim, you have a time frame in which order to submit the proof of claim. Now, that claim form sets forth the basis for the claim, the amount of claim, and a deadline in which that must be submitted. If you submit it, then in the liquidation process, the trustee will review those claims and determine whether or not it's an allowed claim or whether or not they're going to dispute it. Now, a thing to be careful about is some states do not allow subrogation claims to be allowed in a liquidation process. Specifically, California and Illinois come to mind. So if you're dealing with a company that's going through liquidation in those states, an insurance company going through liquidation in those states, you don't even need to file the proof of claim because it's disallowed by statute. If you're not in a state that disallows subrogation claims, go ahead and fill out that proof of claim and submit it. Now, you do have to balance the amount of the claim and the amount you might expect to receive out of that liquidation process with the time and effort to do so. But frequently, there's not a lot of investment to fill out that proof of claim, and if you do receive some funds back, then you've at least got something back on a file that at the outset might have appeared to be just a dead claim due to that liquidation. So again, the things I'm always looking for are there other tortfeasors? Is there another insurance company? And if neither of those two things, is there a way to proceed through the proof of claim liquidation process? For On Subrogation, I'm Jason Sullivan. If you have an interest in these topics, we ask that you click subscribe to see other videos. If you have any questions or have a topic you'd like to see addressed on these videos, please email us at video@rathbonegroup.com. For On Subrogation, that's the long and short of it.